And again, as we look at the boards, the Dow up 54 points, S&P up slightly. Same story on the NASDAQ, but these major indices are down 3-4% for the month of August. This is the last day of trading for August, so good riddance. All right, let's take a look as they clap and hoot and holler. We had a lot of confetti yesterday, maybe not today. There's a young lady using her elbow to push the button at the NASDAQ. Great stuff. All right, we are off and running. Let's take a look at the big board. Those Dow 30 stocks, certainly a lot more green than red, but it's all very modest. The Dow up about 18 points. Cisco, Honeywell out of the chute at the top, but energy stocks as oil moves lower. At the bottom, Chevron in particular. Let's take a look at the S&P 500 if we can. Maybe a slight gain there. We'll have to wait and see. Yeah, up 1/3% for the S&P, back above 4,000, 4,054.54. And the NASDAQ up 0.75%, up 93, 94 points. Talking of the NASDAQ, let's take a look at big tech. Those big growth stocks, despite the 10-year moving higher, we are getting some traction for the big tech stocks. Apple back up 0.5% at 159. Amazon up, Meta up, Alphabet up, Microsoft up. Look at Meta Platforms, Facebook up 5.5%. And let's take a broader look at the broader market if we can. Good morning to you, Susan. Okay, so we've been down for the last 3 sessions. But can we buck the trend today? That's the question. What does your crystal ball say?
So here's the thing is that at the end of the month, there might be some short covering. As you know, where you buy back the shares, you're betting against in order to close out the books for the month of August. However, the S&P 500, we're sitting at the lowest in a month. And this morning, you just had another Federal Reserve president talking about much higher rates to come. So Cleveland Fed President Loretta Webster calling for 4% interest rates at least by next year. No cuts through 2023. So if you do the math, 4% means at least 75 basis points next month. A lot more to come from the current 2.5+ levels that we're at. And then you couple that with the New York Fed President Williams yesterday, who's been calling for 3.5% rates. So as you heard from Jay Powell and the Fed, expect more pain to come in order to bring down that 40-year high inflation.
Exactly. Let's take a look, if we can, at Bed Bath & Beyond. I understand down pretty big today. Yes, well, it's down 24%. They just announced their turnaround plan. Apparently, investors are not impressed.
Restructuring, as they call it. So they're closing around 150 stores. They're getting around $500 million. That's $500 million in cash from a mix of a credit facility of $1 billion and also a loan of $300 million. And that's being, I guess, underscored by Sixth Bank. They're also laying off 20% of their corporate and supply chain staff, and possibly they have filed to sell more shares in the future in order to raise cash. And when you do that, of course, the stock goes down. But I was also looking at the meme stock rally. Did you know that Bed Bath & Beyond, despite the fact that we're down about 23% this morning, they're still up 140%, the stock, in the past month. So that Ryan Cohen effect,
Remarkable.
Despite him selling out, has really boosted the stock price, at least in the last 30 days or so.
Fascinating. Well, I want to take a look at Snap if we can. The company reportedly going to lay off 20% of their employees. What's the issue? Yeah,
so they just confirmed it in the last few hours, and it really comes down to TikTok competition, slowing advertising growth, and also a change in the Apple iOS privacy settings. And that's really impacting all social media companies, including Snap. So Snap says that they are restructuring. They just announced this, and they confirmed that Verge report earlier that 1,000 jobs are being cut from the 6,500 that they employed, and those layoffs are starting today. And they're mostly going from the hardware and developer departments that will be affected. And really, it's been a tough year for Snap, which, as you know, missed on spring sales and profit. In fact, the slowest weekly, monthly, quarterly profit growth and sales growth that they've seen as a public company, and as a result, pulling their current quarter guidance. So the stock dropped about 25% in the session afterwards. And Snap, despite the fact that you're up 7% in this restructuring and this saving, I guess, exercise, the stock is down close to 90% over the past year.
90%. All right. Speaking of Snap, apparently Netflix hiring 2 of their executives, right?
So, and that's to launch their ad-supported tier, which is expected early next year, 2023. And they might be jumping ship, some of these executives, because they knew that these layoffs were coming. So Snap's former chief business officer, sales VP, they're moving on. So this gives Netflix, Madison Avenue, respected ad execs. And Netflix is doing something that founder Reed Hastings says that he didn't really want to do, which is offering ads ads in the service, but with slowing growth, a drop in subscribers for the first time in a decade, Netflix, also Disney, by the way, Disney's introducing their ad-supported tier in early December, and it's a realization amongst all of these big streaming companies that the streaming world has changed. Now, my question is, will that change the binge model that Netflix pioneered, since ads are maxed out when you have an episode drop per week? So you have that water cooler effect and that anticipation of the next episode.
I love the binge. I don't want to have to wait a week because I'm spoiled. All right, we had some earnings before the
Stranger
bell,
Things,
Susan.
I think how many hours was that? I was thinking about the binge on Stranger Things.
I know.
That cost me so many hours.
Crazy. I know, like $1 billion something.
Yeah.
HP, the computer people, reporting before the bell. What was their story?
So they had an inline spring sales and profit, and they actually were up in the pre-market because they talked about enduring demand for business spending and IT spending in particular. HPQ, which is more of the consumer side, since Hewlett-Packard split up into two companies, they were actually down on slower consumer demand. Now I want to talk about the owner of Calvin Klein and Tommy Hilfiger, PVH, and they're also cutting jobs as well. 10% of jobs by the end of 2023, also cutting their full year guidance, and they're talking about a challenging economic environment, and they're hoping to save around $100 million each year through these job cuts. But you see this running theme here, and as we head into that non-farm payrolls number on Friday, a lot of these companies are pulling back in a slowing economic growth environment.
Sign of things to come, definitely. What about Chewy? The pet people are down big, I understand, today. Let's take a look. Down 8%. What's going on?
Theme this morning. So this is Ryan Cohen. We talked about Bed Bath & Beyond. This is his original company. And pet products retailer, they actually made money instead of losing money in the spring quarter. So I think this has more to do with, I guess, their guidance going forward. And they're predicting that sales are lagging, prices are up, and consumers are focusing on pet spending on food and medications. But as you know, if consumers have less to spend, inflation is high, they tend to pull back on some of their discretionary spend.
They do indeed. Great rundown today. Thank you, Susan, very much. As the Dow turns negative,